This article is coming from Morningstar. Which funds are taking the biggest hit? Silicon Valley Bank and other bank stocks. As the ripples from SVB Financial's SIVB meltdown spread across the financial sector, some funds are booking significant losses. The financial sector select sector SPDR ETF XLF fell 4.1% on Thursday, while the SPDR S&P Regional Banking ETF KRE lost more than double that, with an 8.20% plunge. This is important, the Regional Banking ETF. ETFs focused on regional banks were most exposed to Silicon Valley Bank stocks, and as a result fell the hardest Thursday. Silicon Valley Bank was SPDR S&P Regional Banking ETF largest holding as of Wednesday, when the $2.2 billion fund carried 2.3% of its portfolio in the company. The ETF declined 9.2% Thursday and is down 22.5% over the past year. Now, according to billionaire Bill Ackman, he thinks that if the Feds don't step in and do something, what we have seen thus far will be irreversible. And he anticipates if nothing's done, we're going to see a national bank run. The hardest hits more than likely going to be the smaller regional banks. So let's look at the chart of the ETF KRE. So if we go to the monthly chart, I'm just going to put lows and highs, recent lows and highs. We had a recent high. This was back in February of last year at 79. Recent lows. This was the pandemic lows at 27. So on the monthly chart, we've been range bound. However, in the past year, we have seen momentum to the downside. If you can't read price action, just follow in this case, the 13 simple moving average. And when I look at the chart, I'm trying to see how far price can go down. I mean, you have two gaps. You have a gap at 48. You have a gap at 40. These gaps have not been filled yet. Looking at previous resistance and support. Okay, you can say price is currently at some major resistance support now. Resistance, support. We don't know yet what's going to happen here. Let's go to the weekly chart. We can see price broke down and breached this, we'll call it short-term channel. So if I was a guessing or betting man, price could retest the bottom of the channel and potentially could fall further if we do have a bank run this week. If the Fed step in, then we should have a further pullback. Let's just go down to the daily chart. This was Tuesday of this past week. The gap down, another gap down on Thursday, another gap down on Friday. Now Friday, price gap down, but did not close at the lows, pulled back. So Friday was a doji candle indecision. So not really sure where the next candle and direction is gonna go. Don't really know. But according to the weekly chart, again, price broke the down channel. Simple moving averages are somewhat sideways, so the only thing you have is price action. Let's go down to the daily chart, and I'm going to see this pivot high here, which is at $46. This is the gap fill I was referring to on the monthly chart. So it's hard to say. Let's go to KRE, top holdings. As the article had mentioned, SVB was its top holdings. You have First Republic Bank. I did a video on this bank, how this could be the next bank to go under. You have Zion's Bank. That's another bank of concern. Fifth Third Bank Corp. PNC Financial, which I was a part of at one point. So let's just take Western Alliance Bank for a second. Very similar chart, right? Let's take First Republic. Very similar, right? All right, let's go back to the KRE. I mean, the move was here. If you saw it coming, there's no trade at this time. You would have to wait for a close, say a weekly close below this major resistance zone here, or wait for it to bounce to get to the bottom of the channel to ride it further down. From a technical standpoint, there's no trade setup. But even from a fundamental standpoint, there's no trade setup, because you don't know what's going to happen tonight into tomorrow, Monday. So you just have to sit on your hands for the time being. But we did confirm that some of the top holdings in this ETF have a very similar structure in terms of price action. And that makes sense, right? This is an ETF representing those regional banks. But if Bill Ackman is right, and there's actually a bank run, if the Feds don't do anything, let's just go to the charts. No reason why price can't test the $35 level. Why 35? Because these long range green candles that are on the monthly chart, the buyers are really much lower. You might get a reaction once and if price fills the gap, but here's where the buyers are really, right? This is the accumulation level. Up here was the distribution level, right? Buy low, sell high. That's the name of the game. Thanks for watching, subscribe, and please like the video.